Happy Aloha Friday, everyone. I hope you had a great Friday, and I hope you all have a wonderful weekend. We're running out of time in the summer to enjoy yourself, so make the best of it while you can because fall and winter will be upon us. However, with the rate that global temperatures are rising, I'm not sure you have much to worry about as winter will soon also be summer. So enjoy the winters, I guess I could say, while you still have them. Anyway, overall, this past week was once again another fantastic week for the stock market. The problem for me as an end of day trader is that positions, new signals are coming from stocks that are either wedging higher, well extended from the 200-day moving average, or well extended from their overall uptrending, I guess you could say, mean. And a lot of these stocks and indexes like to revert to the mean. And if you would draw a linear regression line right here through the middle, you could see that a trip to the 50-day moving average would only seem normal here. However, in very powerful uptrending markets, overbought stays overbought, and we could easily continue to rally higher throughout the way. And a recent example was Yelp. Yelp, I passed on as a Bible gap up. Once again, a highly shorted stock. Straddles and strangles paid off amazingly well. Nobody played those in our chat room, though. However, a Bible gap up signal was issued, by a member in our room, and I had no interest in it because look at how far it is extended from the 200-day moving average. On that note, my second in command noted that this chart pattern is very similar to the 2004 Apple pattern, which led to a 100% gain before a pullback, and he turned out to be right on the viable gap up validity of the move as Yelp continued to work today, up another 10%. Very impressive moves, and that continues with CNQR from the day before, as you could see. Facebook, and the one that made one of our subscribers very wealthy this past week, QCore, a six-figure gain off a five-figure investment for QCOR. He wasn't as heavy into Facebook, but once again, another fabulous play, buying the Facebook calls ahead of the Bible gap up. And look at it, just continue to move on. So unless you're playing straddles and strangles, and unless you're buying the Bible gap ups from earnings, it's hard to buy stocks on an end-of-day basis as everything is extended and or not perfect. For instance, the only stocks that I was interested in following Friday's session was MTZ. However, when I look at a longer-term pattern in MTZ, I can see that breakouts don't like to hold. Buying it on the pullback, drawing uptrend lines off the lows is a better way to buy it. So this move to me just isn't good enough, doesn't have a strong enough group relative strength rating. I think it's only like 18 right now, so I'm just not interested in it. WGO, a pattern that I like a lot better. However, this move today, even though it is a pocket pivot point buy signal, we don't see relative strength line hitting a new high. We don't see money stream hitting a new high. And we still see TSV moving quite vigorously on the downside. Still, it could easily continue to break out higher, but to make this a new long today, I would have to see above average volume, even though this is a pocket pivot point buy signal in a relatively strong stock whose group, I believe the relative strength rating is only a 60. So once again, we're not talking about a really exciting stock here. The last long possible is VPRT. I saw a ton of A's, saw it had a relative strength rating of 90, an EPS rating of 90. What's my problem with going long this stock? It's wedging higher once again. The stock didn't really pull back in a nice fashion from these highs in July. Instead of pulling back in a downward slope as my mouse pointer is moving, it kind of trended higher, and while there's nothing wrong with it, buying a breakout up here with the 200-day moving average so decently far away is just tough to do. And if you look at an arithmetic chart, you can see that whenever you do have breakouts before, you get some choppy action pullbacks before it does move higher, and a lot of times the breakouts just don't even work before pulling back significantly and then finally marching higher. So this is not a great trending stock either. Therefore, I have no new long signals again. And I believe for the entire week, I only had 3. One failed miserably. One is giving a partial sell signal today, MEET. And it's only giving a partial sell signal because it's closing below the 20-day moving average before producing any gains. If it would have been able to close above the 20-day moving average today, it wouldn't have been a sell at all, as it continues to have Max Green Bop in a beautiful consolidation, I guess, tight trading pattern, I guess is a better way to term this pattern that I'm looking at here, a tight trading range that should lead to an upside resolution. However, the mere fact that it didn't blast off immediately following this huge accumulation day, always is warning sign for me, but still, it could easily consolidate further sideways and then blast off higher, so it's not out of the woodworks yet. And then CCF is only a partial sell, 25%, with a close below the 20-day moving average on volume that's above average. You can go ahead and wait for a 26.45 violation if you want to. I'm going to go ahead and get out 25% or 20% here. Or possibly more depending on how many shares I'm long in the risk account. But overall, CCF is the only partial sell signal besides MEET today, and those are the only two trades to make. And once again, if you don't use the 20-day moving average and are waiting for a close below the open of 168, you could still be long MEET. And if you want a confirmation of the 20-day moving average break, you can use a 26.45. So technically, you might not have any sells at all today. But overall, getting back to the market, everything's great. Unfortunately, what I wanted to see before the week ended was for us to continue to pull back. I wanted to see us to continue to move sideways, hopefully touching the 50-day moving average before we did resolve higher. By resolving higher before we could touch the 50-day moving average, we are still too far extended for safe purchases here. I would rather see the market pull back to around the 50-day moving average and start to move up again before hunting for new buy signals. As if you would buy Facebook here, you're insane. If you buy Baidu here, you're insane. If you buy QCore here, you're not necessarily insane, but you are looking at buying an extended stock. So, I want to look at more of the stocks like Amazon that are basing out, Google that are basing out, DDD, which is basing out, SSYS, which is basing out, and look to get long those stocks on a breakout if our market continue to move higher. The one unfortunate thing is that on the breakout to new highs, it's nice to see volume above average, but too bad volume surges couldn't have been huge, well above average. That would have been, of course, way too much to ask and way too much confirmation of uptrend. Instead, we still have above average volume, but nothing amazing. And you can see on the New York Stock Exchange, we only have 4 above average volume days since our move off the June lows here, and the day before yesterday. A few pocket pivot point buy signals, but still nothing completely amazing. Just like the Russell 2000, trending higher, beautiful intraday reversal off the lows today, and just an amazing intraday move. I wonder if I have FinViz open just to show that across the board going over here. Look at those moves in these indexes. Wow, very, very powerful market we have here. It'd be nice to get a pullback. We'll see if we can next week, or if we can't increase on the gains. And if that's going to be the case, it's very doubtful we're going to have too many new signals. But our current longs continue to do well. Keep focused on those viable gap ups and straddling and strangling the high-quality CanSlim stocks that are heavily shorted. Aloha.